I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, another week where we deliver answers to questions our customers have. And this week, that question is about grossing up income. What the heck is that?
Gross up income? Gross, man. What is that? Who talks in terms of grossing up?
Yeah. And I am pretty sure nobody is watching this accidentally. Okay. And that's something about these podcasts. Like if you're watching, you just didn't stumble across this, this episode.
Yeah.
You must have been searching for something related to, maybe your Social Security income, and you recently were getting a mortgage or in the middle of an application, and someone mentioned grossing up, right?
Yeah. Yep. Yeah.
And now you're wondering, what the heck is that?
One of your friends mentioned it. I was able to gross up my income on my loan application. Like, what does that mean? So yes, so the person's, that actually searched for us is probably someone who's been very diligent lately and knows this topic, but we also wanted to be able to make it simple for other people. So we thought that we'd just define like, what is grossing up? And I think you and I were talking before the podcast. It's what? It's giving borrowers extra credit. That's all it is. You've got income. When we gross it up, we're giving you extra credit. That's all there is to it.
So what's an example?
An example is you make $1,000 a month for, what are we going to say?
Social Security?
Social Security. How about one that is always able to be grossed up?
Okay.
What's a good example of that?
So
that'd be a foster care income.
Yep.
Okay. So you make $1,000 a month for foster care income. If you're doing a conventional loan, you can always, right? There's an asterisk. For some reason, there could be one little weird caveat, but 99.9% of the time, that income can be grossed up by what percentage?
25% on a conventional loan.
Okay. And how much for
15% on a FHA loan?
Okay.
And
so
VA loans, folks, there's no grossing up. Okay.
Got it. Okay.
Go. You're going to get into the example though.
Yes. So basically the gross up just giving you extra credit. You make $1,000 a month for foster care income. Foster care income typically always is able to be grossed up. There's a percentage to it, and you're always giving extra credit.
So if I get foster care income and I'm getting a conventional loan and my foster care income is $1,000 a month, how much income can you give me credit for?
If it's conventional, I'd give you an extra $250 worth of credit.
Okay, so $1,250 goes for
$1,200. Correct. And an FHA, it'd be $150 more. So literally, folks, when we say gross up, I want you to be thinking extra credit, also raise. I mean, when it comes to applying for a mortgage, we're giving you an additional almost income that we can put on paper. You're not receiving it in your bank account, but we're giving you that extra credit. So let's just talk about those incomes that are typically always allowed to be grossed up.
And let's talk about why are they always eligible?
Okay.
Because they're not taxed.
Because they're not taxed. So when people talk about gross up, I think it's safe to say it's always due to a taxable or non-taxable event. That's it. So incomes that are not taxed are simply able to be given extra credit because there's less burden on that income. And I brought this up before, and I think it's a little bit goofy, but I do think it makes sense that, I want to kind of brand this podcast under the Neapolitan ice cream example, which is our incomes. And when we're talking about grossing up, people talk about net incomes. People talk about gross incomes. Okay. And now here we're talking about something even worse, gross up. So the vanilla is going to be the net income that you earn, that which gets deposited in your bank account. The gross income that's basically before taxes. By the way, folks, we're always giving you credit for your vanilla and chocolate. We're always giving you credit for the vanilla and the chocolate, which is your net and your gross. We're always giving you that. Okay. So don't worry. Don't call us and tell us how much money you're actually getting deposited in your account. Give us the bigger number. How much are you getting before taxes? But this topic is beyond that. So, Ed, let's.
Yeah. So there are income sources that are always non-taxable. and there are income sources that are sometimes taxable. And both of these categories can be, are going to have the gross up quality. Okay. So,
correct.
So let's talk about the incomes that are always eligible. What kind of incomes are always eligible that are not taxable, that are always eligible for the gross ups?
All right. You want me to listen or you want to go for it?
No, go ahead. Yeah.
Okay. So number one, child support payments, okay, are always going to be able to be grossed up. So you get child support payments, guess what? You just got a raise, okay? VA benefits, military income, workers' compensation, supplemental Social Security. I don't know if we need to describe that for the borrowers, but that can sometimes be a little bit confusing.
You'll know if you have supplemental Social Security.
Okay. Adoption income and foster care income. So those categories can always be grossed up.
And folks, these incomes do not show up in your tax returns. So you're going to have to help your lender out by getting documentation from these sources and also prove that you can continue, that you're going to continue to receive them for 3 years.
Right. Okay. Awesome. Now, why don't you cover those items that may be able to be grossed?
The ones that may be able to be grossed up are Social Security income, retirement income, pension income, annuity income, IRA distributions, housing allowance, and long-term disability. Okay, so each of these are going to show up on your tax returns, and sometimes a part of that income is taxable, or all of it's taxable, or sometimes none of it's taxable. And whatever portion's not taxable, this is important. Whatever portion's not taxable, we can take that amount and gross it up. 25% grossing on the conventional loans and 15% gross up on the FHA.
So I want people to be thinking about their income if there's a portion of their income that can be grossed up as like a pie. So if you have 2/3 of your income that you're paying taxes on for Social Security, but 1/3 of it you're not, we're applying a gross up on 100% of just that 1/3. Okay. So just the 1/3 that is not taxable, we're turning the little gross up switch on and we're able to gross that up. The other 2/3 will just be what it is. So I think that's probably the most critical thing to think about is just, and again, a lot of borrowers don't understand how much of their income is taxed and not, but some do. So we would simply look at that number.
Yes, and I think the simple way to do that is we can show you pie charts here. I was thinking that maybe we show you numbers, but I think the easiest thing is just understanding that concept and sharing with the lender your tax returns and the income. They'll be able to calculate that for you.
Mm-hmm.
And then that's what we do every day at the Mortgage Brothers team. I mean, we're looking at these income sources, and sometimes we need to, we don't always gross up the income. If we don't have to, we don't even get into the weeds with it. Okay. But what we know that if we have to, it's an extra arrow in the quiver.
That's right. Yeah. We're always looking for ways to give you, every little benefit that we can. And this gross up allowance is an awesome one. So
that's right. We do this every week. And we put together these podcasts answering the questions you have, and every one of our clients, everyone's unique. And ask away your questions. If you like this channel, subscribe to it. If you like the show, like it, comment, email us. We'd be happy to help.
Awesome, folks.
Take care, everybody.
All right. Have a good night.
Hey guys, thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com, and be sure to ask us for a free quote on your next mortgage. We'll be sure to give you personalized service and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917, and 1618695, Equal Housing Lender.